Candle by candle psychology is pretty much my go-to at all times if I'm trying to figure out what it is that the market's doing, why it's moving up, why it's moving down, and why the speed of those things are happening in the way that they are. Going candle by candle really helps us understand not only what's going on from previously, but also gauge context so we can best position ourselves to move forward. Hey there, John Henry here, SSFTG. Welcome to the video. If this is your first time on the channel, welcome my friend. In this one, we're going to be taking a look at our candle by candle analysis. One of my absolute favorite things to do when we're trying to both figure out what the markets are doing or if we're just trying to practice and learn and grow as a trader. Of course, before we can go into even bar one, we have to understand what's going on contextually, and the easiest way to do that is to get a perspective check by zooming out. So, by zooming out, we can see that the market is trying to rotate its way up. It does seem like it may be running out of steam a little bit, but we've got an overall ascending wedge that has a break down. Usually with a bullish pattern that breaks down, buyers look to buy into that as an opportunity to lift the market back up. But if we look at where the market is locationally, we have an unfilled gap, which is waiting right here, and we don't really have any structural support until inside of there either. So the market's got a little bit further to go until we really start pushing into that support zone. And we can kind of easily see where that support zone is just based off of this last few portion of candles here. But if we go across, let's see if there's a POC somewhere inside there on the lower bit, and that will give us something to gun for. There we go. So 43.05 is the POC from back here. What is that? On the first, where everybody kind of got stuck. The first candle of the day then, zooming in a little bit closer to where we are, is, I mean, that's a really strong bear bar. This is an outside gap down, and this is a lot more than just an outside gap down. I mean, this thing is way gone. So with that kind of context, obviously the bears have some pretty good juice, and they're going to be looking for a continuation. Generally speaking, the first candle of the day only has about a 20% likelihood of success. So in terms of staying as the high of day or low of day. So being a bar one seller right out of the gates comes with low probability. That means that if sellers are going to be shorting underneath this low, they're likely going to be looking for a 2-to-1 or more to the downside, as that's about the only thing that's really going to fit. And the 2-to-1 we can see is way far down here, like that's way under the target at 43.05. So what might be more beneficial then is to look for that 2-to-1, but inside with an inside pullback. If they can get an entry somewhere, let's see, what about here? A little lower? Too far. A little higher? Right about there. Okay, so if they can get an entry point short at 43.20 half or better, that allows them to place their stops above the highs, but it also puts their target down here at 43.05 where the support is expected to come in. It's kind of the best of both worlds here. Okay, we do have a little bit of responsive selling going on. Inside bull bar doesn't really prove anything, but given how weak this bar is, it kind of adds a lot of emphasis to the sell side. We'll have to wait and see here. But I mean, this isn't proving anything. If anything, the only thing it is proving is that sellers are getting better prices. They would have been able to get some really good prices inside there. No trigger below the bear bar is a bit of a concern. We've got a bit of a micro double bottom here. That could be some pent-up energy, especially given the context here, that might help the sellers a little bit. But it might be useful to get a bit more info too. Okay, big breakdown to the downside. Now sellers have some conviction. They're able to run down a little bit further. It hasn't reached all the way out to the target, but any inside pullback, that's going to gain their confidence so they can reshort back to the down move and keep this thing going. With that down move into perspective, we do still have a possibility that the market rolls all the way back up and fills the gap. I know it seems incredibly unlikely, but it is something that we have to keep in the back of our mind. And if that's the case, where would the buyers rather buy in for that? And I think likely the previous POC, structural support, back to previous areas of candle support makes a lot of sense. So this dip down here at 43.05 is not only necessarily the sellers exiting, but also the bulls looking for a continuation up. We're going to need some proof of that because right now it's kind of catching a falling knife, but it is something to consider. Well, speaking of falling knife, giant bear bar to the downside, heavy continuation, shattering through the target. I mean, it went way through the objective that sellers would be looking for. As far as a continuation play, if they're able to get maybe some kind of inside pullback, I'm sure sellers would love this kind of continuation, given how bearish this is. This is also possibly creating some candle gapping. We won't know till the next candle, but we do have possibilities of momentum down that is sustaining. Or not. or they take the whole thing back. Did that close the gap? It did. It also closed the candle gap, so that finishes off the whole thing, meaning that the downside is limited. It's much more likely that if it's going to correct, this is the spot that it's going to correct back on. Knowing that the sellers may have missed their opportunity, they could be looking to anchor their stops above the highs, look for a good algo pocket back to the downside, and that would give them resistance right back around that 43.18.5 area if they can get it. Holy moly. Okay, big, jeez, big bull bar to the upside. That's a tough one to sell into. With this amount of momentum up, the bulls could be looking to reverse this back higher, and now we have to go back and kind of reference like, well, wait a minute. That first candle of the day only has a 20% likelihood of being the high of day or low of day, and this candle looks like it means business. They could be gearing up to go back up to a new high of day. A lot of shorts aren't going to be the first ones to the party here wanting to sell into this until we can get some proof. Okay, now that is good proof. Now we've got some bears pushing back down. We have another lower high. That's incredibly good information because now they haven't invalidated the shorts. They have a phenomenal bear bar. There is a concern that we have some slight bullish gapping that could get in the way. This isn't a bull bar, though. This is a relatively strong bear bar, in fact, so that could shut down pretty quick. Bears looking for location-wise an area of interest to prove itself, that's it. Sellers will be looking for a continuation phase back down again. Now, scalpers, they can fit their targets inside the lows. If they're going to try to get anything more than that, though, for a 2-to-1, that's either through the bottom or they're once again going to have to look for a better entry point. Let's see here. A better entry point, we know that the market can push through 43.05, so we want it at least in the high closes. About there. There we go. So if the sellers are able to get a short at around 43.17, they'll have an opportunity to drive the market lower and finish the objective once again. This is a very strong signal from the bears. It's just a matter of whether or not they're able to stick the landing. Jeez, oh Pete's big bear bar to the downside. Now, unfortunately for the sellers, if they were waiting for a better price, they weren't given it. That does happen sometimes. Sometimes you miss the party by trying to get, we'll call it greedy on your entry point. I don't know necessarily that it's greedy. You're just trying to control your risk. But it just didn't come back to give you the entry point. It's not to say that it can't, but with this amount of bearishness to the downside, it's probably going to keep going. And sure enough, it starts breaking down through the lows. Do they stop at all? All right, well, we've got another bounce, and this is where sellers may try to get going again. Timing is a bit awkward going into 10:20. Yeah, it's close. We do have phenomenal candle gapping to the downside right here to here, and even a little bit right here. At the very least, that's suggesting that downside targets should be able to span out and reach to 42.85 or so before this train stops. Ooh, they're filling the gap in. This gap is gone, so that gap has been filled. Very weak bull bar, not really proving anything. Strong bull bar, but now creating somewhat of a body-ish style spike and channel, right? Spike down, channel formation. They're trying to deviate above. If you were to think of that from that perspective, then you would have this, where you've got to move down, and the market is in a bearish pattern trying to break higher. That's quite a bit of resistance, right? That's an area that a lot of sellers will be looking to sell back into and try to pressure down. We have our pressure back down, not able to complete down through the lows. Maybe they're looking to go back up. Maybe they're looking to break down. We've got a bit of sideways consolidation here, but one thing's for sure. Sellers are still selling off of the highs to push the market back lower. If we go into the next one, okay, little bull pop. Now this does fill in the candle gap a little bit, so we've got to go over here. That means that our objective has to move a little bit right there. Technically speaking, it is still down to a new low, barely, but that is the candle gap objective for them to finish this off. We've got bear movement back down again. Likely sellers will be looking for a continuation down. There's very little distance for it to go anymore before it finishes the job. And there it finishes the job and starts, I was going to say, and it looks like it started having support, but broke through. Now we're back above it. Are they going to have... Yeah, look at the immense amount of difficulty they're having here trying to break through this area. Big support zone. Let's see what happens if they can come back. Ooh, bulls starting to come back in. Yep, and the bears are running. And actually, this is the current market price right now. So these are the sellers who are looking to get their objectives taken care of. These are the bulls who are looking to get their way in, waiting for the proof. They've got the proof. Now we've got the sellers running and even candle gapping in the opposite direction. Sellers are obviously running into trouble. And now we can revert back to that probability of, wait a minute, that first candle of the day only has a 20% likelihood of being the high a day. It's not too far away anymore, and it doesn't look like the bears are too healthy. Bulls will be looking for a completion of probability as well. So hopefully that shows you why candle-by-candle analysis is so important. It's a fantastic way to not only learn the underlying psychology of why the market's doing what it's doing, but it also allows us a way to go candle-by-candle without cheating and kind of forecast what we expect to happen next. We're not always going to be right, but it's an incredible way to continue our practice so we keep growing as traders every single day. That's going to do it for this one. If you have any questions, comments, topics for new ideas, or anything else, drop them in the comments below. I always love hearing from you all. Thanks for watching, and until the next one, we'll see you all then.